Against the backdrop of the latest volatility in the equity market, we received a lot of questions regarding the equity allocation within the ethna aktiv. And therefore, we think it makes perfect sense to briefly explain our focused 20% allocation. What does focused mean in this context? Actually, it's just a split between US and Chinese equity. Since the middle of the year, we avoided European equity. There are two reasons. First of all, there's political uncertainty around Italy and Brexit, and secondly, there's sluggish growth. Over the course of the year, we ask ourselves, what do we have to invest money into equities at this late point in the business cycle? The answer for us is very clear. It has to be growth at a reasonable price. But quite frankly, on an index level within the developed world, you have to go either to China or to the United States to get it. Let me give you some figures to America. Next year, it's growing at 2.6% per annum. Yes, there's a slowing, but it's still above potential. The earnings estimate for the broad index, the S&P 500, is approximately at $170, even after some earnings revisions. That puts the whole index at a price-earnings ratio of 16. That's close to the long-term average. In this point in the business cycle, without any recession in sight, that's attractive for us. China, on the other hand, is a different story. Yes, there's slowing growth. Yes, there's an evolving trade war, but given the fact that the broad market already corrected almost 30%, puts its valuation in terms of price-earning ratio at close to 9, below the long-term average. And this within an economy which is growing at an annual rate higher than 6. And even more convincing for us is the fact that there are officials, so the government, the central bank, which do have the means and the willingness to support, to manage this growth. They did so in the past, and they are going to do so in the future, either via fiscal or monetary stimulus. Let me sum this up. We are highly convinced that this active, very focused approach enables us to generate attractive, risk-adjusted returns for you going forward.